Right here, we'll call this meeting Buncombe County Audit Committee order. First, the agenda has been distributed. Approval of the October 7th, 2025 minutes distributed via email. Does anybody have any questions?
Yeah, I do have a couple minor corrections.
Okay.
I had asked for my name to be spelled correctly. It should be E-I, and it was misspelled again in the who are present.
Oh, no, that correction.
Okay, thank you.
Yep.
Thank you. Yeah, there's no big thing, but
Z-E-I.
Z-E-I.
No, we want to correct.
Right.
But we don't know who you are. It's not correct.
That's right. Well, maybe if something bad happened, I could say, oh, that wasn't me.
Yeah. Any other corrections? Is there a motion to approve those minutes?
I move that the minutes be approved as presented.
Second.
We say as amended.
As amended.
Yeah. Okay. All in favor, say aye.
Aye.
Any opposed? Mason, want to lead us into the external audit presentation?
Certainly, and before we go to that item, so we do have Tim Lyons available online with you. He is our engagement partner from Malton and Jenkins. He's the same partner that it's all 3 years so far that we've been with Malton and Jenkins. I do want to jump down with the agenda, the amendment to the external audit contract that is no longer needed. So move beyond that item, David. I'm happy to discuss the contract. I have questions about why it was there and why it's being removed. But Tim, I'm ready for you to take it over when you're ready.
Great, thanks, Mason. Just want to double check again that everybody can hear me. Good to go.
Is the volume good in the room? Or do you...
A little bit more would help.
Then we're going to turn up the volume on our side a little bit. But if you want to start slowly, we'll get.
Okay. Great. Well, I appreciate everybody. Let me join the meeting this morning. And as Mason and I have discussed, I do want to let the audit committee know that once we do issue a final report later on this month, if you all would like me to come and present a final version, even though we don't anticipate any substantive changes, if you all like me to come present a final version at another meeting in person, I'm happy to do that. So, but my presentation this morning is going to touch on an overview of our audit opinion and our compliance reports. We'll have a section that we refer to as our required communications. These are the things that the audit standards require me to communicate both to the audit committee and to those charged with governance. We've got a couple slides on general fund trends that we've presented in previous years, and just kind of the more important things that county governments and specifically Buncombe, I know in the last 12 months or so has been particularly focused on the general fund and fund balance, and then just sort of some general recommendations and related matters that we're communicating to the majority of our clients where we are right now. As Mason said, my name is Tim Lyons, and I do serve as the engagement partner on the county's audit. That means that I'm responsible for overseeing our engagement team and for ultimately signing off and approving our audit opinions. And I do, before we get into kind of the substance of the presentation, just to sort of touch on briefly what Mason was referring to there about the contract amendment. The reason that we're not presenting a final audit, if you will, this morning is because of a significant delay in a document that is known as the compliance supplement. Every year, the Federal Office of Management and Budget publishes a document called the compliance supplement. The compliance supplement is a roughly 2,300 page document that tells us, the auditors, how to audit and test federal programs, the single audits that we have to do every single year. And typically, in a normal year, that compliance supplement is issued in May or June of each calendar year. This year, in May or June, the compliance supplement was still in the process of going through final reviews, We were then told that there was a bit of a backlog at OMB and getting the final review completed and the final document assembled and issued. Those delays sort of trickled into August and then into September. And then we were told, hey, look, this is going to come out any day. And then the federal government shut down for 40 days. And so in the midst of all of this, we still did not have a compliance supplement. The state of North Carolina governments do have the option to what is known as split issue or separately issue, to where you could issue your ACFR and then issue your single audit at a later point in time. That is an option that governments have. However, the state of North Carolina made it abundantly clear that the LGC would not accept such submissions and would not allow governments to separately issue that way. They wanted the continued issuance of the audit report and the single audits at the same time. So that put us in a position where we really were not sure when the compliance supplement was going to come out. Lo and behold, last week, on Tuesday of last week, the LGC, the Local Government Commission, put out guidance saying, look, you can ask, or you can go ahead and do an extension if you have to have federal single audits, which the county does. If you have to have federal single audits, we are allowing you to submit your audits all the way up until February the 12th, and they will not be considered late. You just need to do a contract amendment and indicate that the reason for the extension is because of the delay in the compliance supplement. That was Tuesday morning. Tuesday afternoon, the compliance supplement was issued. So kind of a crazy couple of days. I know all of us in the audit community really appreciated the federal government sending that out to everybody 2 days before Thanksgiving. It really allowed us to enjoy a nice restful holiday and not endure hundreds of questions from our clients now that this compliance supplement was got. So another win for us. From the feds this year. We'll all be sending them thank you cards for the way they've handled this entire compliance supplement situation. But what all of that means is that because of where we are with the county's audit, we are substantively finished with all of our testing. We are going through our final review processes right now, as it mentions on this slide right here. Brian Nicholson is our quality review partner. That is, every single one of our audit engagements goes through a second partner review before we can issue anything. Brian has not had anything to do with the engagement. He's another partner of our governmental practice here. And so he is going to be looking at the county's ACFR and the audit file tomorrow. Because of the fact that we've done all of our testing and because there were no substantive changes from the draft compliance supplement that we were provided back in September and the final version that was issued, which then begs the question why all the delays, but that's another conversation. We are in a position where we will be finishing up our audit procedures this week. We'll be getting back with Glenn on any final changes to the ACFR if there are any ones that need to be made. And we will be in a position to issue our final reports this month. So that is why we do not need to do the contract extension. We'll be able to be done and get the county's ACFR done and issued in December, which is ahead of the original deadline, which is 12/31. So just wanted to give you all that bit of background there. That is why, as you'll see on like this slide, for example, where we talk about our report, it says we anticipate issuing unmodified or clean opinions on the county's financial statements because we have not issued anything yet, because up until last Tuesday, we weren't sure when that was going to happen. Now that we know that the compliance supplement has been issued and we're going to finish up our procedures in the next, 5 to 7 business days, had this presentation been put together, 10 days from now, we could say that we have issued unmodified or clean opinions. So, but kind of getting into the meat of the presentation, actually, before I do that, I'll just pause there. Any questions about any of that related to the compliance supplement, timing of the audit, anything?
Glenn and I are very excited.
I just wanted to give folks that.
Glenn and I are very excited. I think
Listen,
this may be our first timely audit completion in around a decade. I think we can proceed it done, but looking through.
Well, I mean, I do, not in the slides here, but I do want to commend you all. I mean, even last year, in the face of some pretty significant challenges in the wake of Hurricane Helene, I'll just say that you all were not the last county audit that I issued last year. So I think I even use you all as an example in talking to some others that listen. I was like, listen, Buncombe County got their audit done before y'all. So y'all should feel pretty ashamed given the fact that, these folks were like out of house and place to work here for a while, and they still got their audit done before y'all did. But really appreciate all the hard work that y'all do in getting the audit completed. In getting it done timely and working with our teams and all that kind of stuff. And Mason, to your point, we'll be finished and we can all kind of enjoy the holidays and not have to be worried about completing the audit when we get back in January. So to that point, these slides here just kind of give a high level overview of the audit, kind of a general reminder of what our responsibility is and what the county's management responsibility is. The county management is responsible for preparing the financial statements and for maintaining a system of internal controls to ensure that there are no material misstatements in the county's financial statements. And our responsibility is to audit those financial statements and to consider the internal controls over financial reporting as a part of our procedures, but we do not give an opinion on internal controls. As I mentioned, we anticipate issuing an unmodified or clean opinions on the county's financial statements. There's no higher or better opinion that you can get. So those are all really good and positive things. In addition to our opinion on the financial statements, which is in the front of the ACFR, right after the letter of transmittal and the other things in the introductory section, the first part of the financial section is our opinion. And then as you go kind of move through the rest of the ACFR and get towards the back, we then have in the compliance section, there are 3 reports that we issue. The first of those is our government auditing standards report, which is our report on internal controls over financial reporting and on compliance and other matters in accordance with government auditing standards. This report kind of goes over what our responsibilities are as it relates to internal control. We are required to consider and to test certain elements of internal control as we conduct the county's financial statement audit, but we are not giving an opinion on the county's internal controls. This year, we did have one item that we are required to report as a finding in the report. The way that government auditing standards defines what a deficiency, a significant deficiency, or a material weakness in internal controls, when we have a situation like we had, it kind of ties our hands for how we need to handle this in the audit report. The way that the government auditing standards defines a material weakness is that internal controls were not sufficient to detect and correct timely a material misstatement in the county's financial statements. And unfortunately, we had an issue with regard to capital assets where numbers that were reported in the ACFR last year that we audited and opined on included roughly $6.2 million of capital assets that do not belong to the county. And so we had to make an adjustment to beginning net position of the county's governmental activities. And because we're making a material change to a previously reported on number in previously issued financial statements, government auditing standards kind of says, look, that's sort of by definition what a material weakness is. We didn't catch it last year. We should have. So that is the only reason why it's reported as a material weakness. And as we kind of note here on the slide, the issue had to do with the solar panel project. There were solar panels being built at various locations, and once installation was complete, those capital assets are the responsibility of Buncombe County Schools or Asheville City Schools, respectively. Those amounts just continued to be carried in the county's capital asset balances and reported as if they were a part of the county's capital assets. And so we just had to take those pieces out of the county's capital assets. So, just one of those things where the audit adjustment happened to be large enough and impacted a prior year. And so we needed to report that as a finding in the current year Yellow Book report. I can pause there for any questions.
Yeah, who was the party that discovered the error? Was it you all or the county?
The county brought it to our attention this year.
Was that a financial statement finding or an internal control finding or both?
So it's a financial statement. It's a finding regarding internal control over financial reporting. So it's a finding that is related to the financial statements. It's related to the internal controls over preparation of the financial statements.
And how have internal controls been adjusted, or what changes been made so that similar errors won't happen again?
So I think this is one of those, unique situations where it's really challenging to potentially, design internal controls specific to this, other than just to ensure that going forward, we have a way to, when we're doing a potentially like a joint project like this, that we're reviewing those types of things. Glenn, I noticed that you unmuted yourself. I don't know if you had anything additional that you wanted to add there, but this is one of those situations where, from an audit perspective, we kind of look at this as like, this is sort of a unique type of transaction. That's really tough sometimes to design internal controls specific to addressing an issue like this.
No, you're right. It was difficult because it's a project being done between the county and the school systems. It was started, I think, back in 2021. And so the process to calculate and capitalize that information had been ongoing for years. And so it was one of those things that got started one way and then just continued. It just came up this year. We got the question about whether or not those assets really were ours. So we thought we should review it again. And that's where we found out where the error lied. So we just have to pay more attention when we're working on those kind of projects.
Will there be a documented response included in the audit? Or
There will, our ACFR includes right, Tim can speak to it.
Yes, sorry, Mason. I was just going to say, when the county, like any other government, when you have an audit that includes a single audit, a management's corrective action is required for any findings, whether they're financial statement or single audit related. And so that corrective action plan is included in the ACFR, or I guess will be, I should say, because we haven't issued the final document yet.
I sent you the most recent draft that I had available, given it's still in progress. We do have a corrective action plan. It's generally the final pages of the ACFR. And so I'll go back to that document. I'm not sure it's attached to that one, but when our report is complete, it will last page or so.
Okay. So then the other two reports that we'll have in the back there in that same compliance section of the ACFR have to do with our single audit reports. The first report has to do with our report on compliance and internal controls over compliance as it relates to federal programs, which for this year, the federal programs that we tested, the Medicaid cluster, which is an automatic high risk program. We have to test that one every year. Transportation formula grants, foster care, and temporary assistance for needy families, or TANF. So that first report covers those 4 federal programs, and then the second report in there, which is the final report in the compliance section, is the single audit report as it pertains to state programs, which is required by the Single Audit Implementation Act of North Carolina. As you can see there, several of the federal programs, Medicaid, the transportation grants, and foster care, include a significant state component as well. So as a part of auditing those programs for federal awards, we're also testing the state awards as well. But then there were 2 additional programs that were just state funds. The cash flow loan, which is the program that the state treasurer's office created in response to Helene to assist with governments in the western part of the state to cash flow the disaster response. And then the Juvenile Crime Prevention Council. These programs, all of these programs, federal and state, go through a major program determination process. It's a risk-based process whereby we have to decide which programs to audit based on several factors. the most important of which being the dollar amount. So the cash flow loan program is the easiest one to explain. That one we had to select and had to audit this year because it was over $500,000 for a state award and had never been audited before. So there's several criteria that we go through, but essentially these major programs have to be looked at least one time every 3 years, kind of on a rotating basis. And so our single audit reports, we anticipate will have unmodified or clean opinions on compliance. So, no qualified or disclaimer of opinion saying, hey, the county did not comply. So clean opinions on compliance. We did have one single audit finding as it relates to the federal programs. We consider this to be a significant deficiency, and this is a common issue that we see at county governments because of what the state required, how the state requires folks to track time that work on several of these different types of programs, and how most payroll systems now are set up to track time. There just happens to be discrepancies in that. And so there are these things that have to be completed called day sheets. The day sheets are supposed to indicate in certain time increments which things folks over in the DSS offices are working on. And so when we look at those day sheets, we compare them to what is reported on these monthly 1571 reports that get sent to the North Carolina Department of Health and Human Services. We take a sample of employees and take a sample of day sheets and try to match up what was reported on the physical day sheet with what was reported on the 1571 report. And for 1 out of our sample of 40 in Medicaid, 1 out of our sample of 40 for Medicaid and 2 out of our sample for 40 for foster care, there was essentially more time reported on the day sheets than was reported on the 1571 reports. And so, again, this is a common thing. We see this at most large county governments across the state because, again, there's just a bit of a gap there in how the state asks for this time to be captured and reported and how most common payroll systems are set up. We know from talking to the county that we think we've got a kind of a workaround in place to address this. And so we expect this to be fixed when we do our audit testing for fiscal year 2026. But again, we consider this to be a significant deficiency because it's just really a minor thing. Does not mean that the county, incorrectly spent federal or state money. There's not, federal or state money that has to be returned or anything like that. It's just a gap in internal controls and really a gap in systems, if you will. So not a big deal, but unfortunately something that the state of North Carolina does look out for when we do this testing each year.
Tim, can I add a note here? We did have a similar finding in a different program last year. We implemented a corrective action. It seems to have been successful for this year in that program. So we have expanded that corrective action and added some additional layers of review. So to Tim's point, we feel pretty good that we'll have this one covered for the current year.
One additional note, and this has been on the state's policy agenda for a number of years now, and does not invalidate anything that Tim has said or that mentions that as it is still an issue that needs to be remedied. But the state will be phasing out day sheets at some point in the future. So that will be an issue that does sunset at some point, but we don't know when that is. They've been promising that for the past 5 years. So
and these are sheets.
Yeah, and this is one of the
every day about how many hours is put on this, and that no
Right.
Between now and the next audit, do you follow up with these significant deficiencies and recommended action plans in between now and the next audit?
Yes. So our typical audit, rhythm is we'll wrap up the audit and issue final reports this month. And then usually in March or April is when we'll kind of start having our preliminary planning meetings, both internally and with the county with regard to the audit. And typically at those interim, planning meetings, audit kickoff meetings, et cetera, part of that discussion is to go over prior year findings and consider, hey, what changes have been made to internal controls? especially if it was a significant enough finding where we're talking about maybe making changes to our internal control system, then we would want to know that so that when we go forward with our kind of interim internal control testing, we're evaluating and testing the right things. But certainly for the single audit findings, that is definitely something that as we get into our major program selection and our beginning single audit testing for next year, we'll want to make sure that we've got all the items that have been changed and the new process that's in place documented, so that when we move forward with our testing, we're really testing those new controls. So on the next several slides, these are what are known as the required communications. These are the things that, as the county's external auditor, I am required to submit to those charged with governance at the conclusion of the audit. I've done that in writing, and will do that with the Board of Commissioners as well. And so for the next couple slides, certainly don't want to go and read over each one of these items, but usually I just kind of touch on the ones that I think are important, especially for an audit committee, I think are important. So this first one about significant accounting policies, I think it's always good to point out that ultimately management is responsible for the selection and the application of appropriate accounting policies in the preparation of their financial statements. Those are described in great detail in Note 1 to the financial statements. During the current year, the county was required to implement 2 new standards from the Governmental Accounting Standards Board, GASB Statement 101, which has to do with compensated absences, and GASB Statement number 102, which has to do with certain risk disclosures. Neither of these standards had a significant impact on the county's financial statements, and significantly changing the amounts or the disclosures or anything. So if you're somebody that likes to kind of compare the ACFR from one year to the next and maybe see significant changes, there really aren't any that you're going to see from 24 to 2025. As I mentioned earlier, our relationship with management, I do think this is a particularly important one to touch on as it relates to an audit committee, but certainly if we had any issues that we would need to talk about, but full cooperation from county management and staff. I do think it's something that I think we sort of forget from time to time, but as we conduct the county's audit, we have to ask for access to a lot of information and a lot of different people. And when we work with county management, we never feel like we're not getting exactly what we need. We never feel like we're not getting access to the people that we need to speak to. And so appreciate all the efforts from everybody at the county in getting the audit done. There's just a lot of information we have to go through. And certainly when we get into all the different testing we have to do on the program side. So we appreciate all of the hard work from the county. Significant issues discussed with management. We did not have any of those this year. We did not have any issues with regard to, emerging issues or other things. Early on in the audit process, we did discuss the correct accounting for the state cash flow loan program several times to make sure that it was accounted for and properly presented in the county's financial statements. But that was more of a kind of a technical accounting type thing, and not necessarily any sort of a significant issue relating to business conditions or things like that. And then lastly, I always think it's important to touch on auditor independence. We have to be independent both in accordance with our professional standards, but because the audit is conducted in accordance with government auditing standards, the county, we have to be really careful about things we do and we don't do for the county. And so we go through a bunch of rigorous documentation on our side to ensure that we meet all of the requirements to be independent of the county so that we can render an opinion on the county's financial statements. And for fiscal year 2025, we did not have any sort of potential impairments to our independence as it relates to Buncombe County. As I mentioned, a couple of slides real quickly on some trends in the general fund. This chart here shows fund balance as a percentage of general fund expenditures. That's what the percentages that you see on there. Mason and I have talked about this a couple of times, and I know that the county typically is focusing not only on just expenditures, but expenditures and transfers out is kind of one of the metrics that we use. And so these percentages may be a little bit different than what we've previously seen or talked about, but just from a financial reporting standpoint, we look at this because this is how when we complete this big thing called the data input workbook that has to be submitted to the state tends to focus on fund balance as a percentage of expenditures. And so, what these blocks represent, that top block is fund balance that is restricted for various programs. Typically, it's revenue that has come in where we are required to spend that money on programs, specific initiatives or programs. That next level there, that 9% number, that represents fund balance that is restricted for state stabilization. This is a calculation that is required by the state of North Carolina every year, where essentially, to kind of boil it down, is every government in North Carolina is required to set aside or restrict the portion of fund balance that is not in cash. Essentially, and they require you to kind of set that aside so that you don't appropriate that in your next year's budget. And as you can see, that RSS number, restricted for state stabilization, that RSS number has stayed pretty consistent for the county between 8.6 and 9% of total fund of expenditures for the last couple of years. Really, the biggest change when you compare the general fund's fund balance from 2024 to 2025 is the lack of that little purple block there, which is assigned. GASB statement number 54, which is the statement that kind of governs fund balance reporting, requires you to report if you appropriate any fund balance in your next year's budget. So specific to this year's ACFR, it would be if the county had appropriated any fund balance for the fiscal year 2026 budget, that amount would be required to be reported as assigned. And that has been the case for the last several years, where the county has appropriated fund balance for its upcoming fiscal year budget. For 2025, the county has not done that. There is general fund balance. We're not appropriating any fund balance in our 2026 budget. So that's where essentially that assigned fund balance sort of went away as of June the 30th of 2025. And so then, when you combine the assigned fund balance going away, in addition to a roughly $1.7 million increase to general fund balance, that sort of makes up that difference there, which is all falling to the unassigned portion of the general fund's fund balance. And this next slide sort of generally shows, what portion of your general fund's total revenues are being made up of ad valorem taxes. We try to look at this just sort of as a trend to see, how much are we increasing, decreasing, property tax revenue each year? How much is, general fund revenue changing every year based on property tax revenue and those types of things? And what we see here is that for the last 5 years, the county's property tax revenue is pretty consistently between 63 and 66% of total revenues in the general fund. And over the last 5 years, there's obviously been a decrease in the tax rate from 2021 to 2024, and then an increase in 2024 for fiscal year 2025. So the property tax rate has changed a little bit, but with the changes in assessed values and those things, those property tax revenues have remained pretty consistently between 63 and 66% of general fund revenues for the county.
May I ask a question on the previous slide?
Sure.
Yes. So when we go from restricted fund balance allocations or designations, and then there aren't any in the next cycle, where did they go? What's not restricted now? Or what was restricted that they designated that, I say they, we, us, and now it's not.
The assigned portion?
Yes,
Okay, so you're asking about that. Are you asking about like the purple block?
yes,
Yes.
yes,
Okay. So that purple block, that's the block last year that's about 2.8% of your when you look at fund balance at June 30, 2024, there was an assigned portion of fund balance last year that was used, that essentially was the amount of general fund balance that had been appropriated by the county in the 2025 budget. So at June 30, 2024, when we know that we've appropriated and plan to use fund balance in our next fiscal year budget, government auditing standard says you have to report that as assigned. And so
assigned for the county
that
to be,
assignment,
It's
sorry,
to
go ahead.
balance the budget. So our
Okay, that was-
budget balancing
yes,
is.
we weren't using that money. I mean,
Right.
we were using that money to balance the budget.
Correct.
Okay.
And this year we have gone to what's called a structurally balanced budget where anticipated expenditures equal anticipated revenues without the need for appropriation or
Out of
plan
the
to use
general
that
fund.
balance. Right.
Okay, or the fund balance. Okay, thank you. I just needed to understand the appropriation of it. Thank you.
Sure. Yeah, I mean, it's one of those things where it kind of functionally goes away once you get into the fiscal year that you've budgeted for. There's no real reconciliation, if you will, to where that goes. It's kind of looking at it at a point in time and saying, okay, at June 30 of 2024, are we planning to use fund balance next year to balance our budget, as Mason said, versus at June 30 of 2025, our 2026 budget, we're not budgeting to use any fund balance to balance that budget. So that's why there's no assignment reported for that anticipated use of fund balance in our next fiscal year.
And there's a in the operating structure of the county, there's a percentage that's supposed to be maintained in the fund balance at all times. So
Right.
when there is a piece that's appropriated to balance the budget, is there then a recovery time to put those funds back in the general fund?
Yes.
And that's when we do evals?
That's a good point. Yes, so our current policy is maintaining 15 to 20% of
Okay.
available fund balance, which is actually the portions that we as an organization have discretion over. So looking at the categories of fund balance, it would be the unassigned, the assigned, and committed. We have not committed or assigned anything, so really it's that available fund balance. And the plan is if we ever dip below that mark, we have to put a plan in our act that says this is how we will cover. We generally say within the next year, but it's not necessarily that specific policy.
Okay.
So the next, kind of the last couple slides.
Internal or a state mandated?
Yeah, sorry, Tim. So the state recommends a minimum of 8%, which we have found doesn't match the needs of most governments. And so they really just want to say, have a policy in place and make sure that you follow it. And so we did this several years ago, but comparison to peers and what we thought the needs of Buncombe County, where we felt like 15 to 20% was a good mark at that time. But I think that Melissa's continuing to evaluate it since she's been here.
Yeah, I will add that 15% is the minimum for your credit rating agency's metrics to maintain AAA standards.
Okay.
So that's one reason why we
Sure.
target that as the.
So when we go below that, for the AAA rating, how long is the year kind of the standard to replace those dollars back into that reserve, or what do they hold us to as far as that's concerned?
Well, it really just depends. I mean, you meet with your rating agencies and you provide proof, whether it's through your adopted budget or the forecast that is put together within your budget to demonstrate why it went below, exactly what you have in place to. It really just depends on why you went below.
Okay.
So if we were to have gone below for this audit, I think one thing that I had already been working on with our financial advisors is to demonstrate that a larger portion is being captured under our restricted that is going to go away as soon as we got FEMA reimbursement. So it's not dependent on raising taxes, for instance, or reducing other expenditures. So I think that was something that we were moving toward to help justify. But so it really just depends
Okay.
on what drove the
What
balance.
cost it? Okay.
Where are we going to end up? Do we know yet?
15.6.
Yeah, so wanted to point out, Commissioner Whiteside, this is the first time you're hearing it, because we
Yeah,
were pointed to in draft status. We thought we were going to use fund balance, so use some of that appropriated budget from last year. We are adding 1.6 million this year. A significant portion of that is restricted by state law for permits. The revenue they bring in for building inspections has to be used for those same purposes. So we are technically adding to fund balance. We will be at 15.6% of available fund balance against our expenditures and transfers, with this 0.6% above our policy. That's a different number than Tim's shown you. That was kind of the note he was giving you, but we have not reached a point where we need a corrective action right now. Your question.
That's great considering where we were with the yes.
Any more questions on that? All right, thank you, Tim. Continue.
Sure, and not to belabor the point here, but with some of our other county governments in North Carolina, we have been brought into some conversations that those county governments, in conjunction with their financial advisors, are having with the ratings agencies, because apparently there has been a shift in how this restricted for state stabilization piece is looked at by the rating agencies. I don't know if it's because somebody knew what this was or whatever in the past, but it seemed like from talking with these folks in the past, the rating agencies sort of just automatically sort of looked at that restricted for state stabilization and sort of added that to your fund balance, because they know that it's really just the state kind of setting aside something as a budgetary mechanism and not really as a true restricted fund balance that has to be spent, like Mason was just saying, that has to be spent on certain programs. And so I don't really have a good overall conclusion on that yet, because those conversations are ongoing, but it appears that there's trying to be a bit of a closer look being given. I think the point that some of these county governments that we've been talking to are making is that sometimes North Carolina counties are maybe being, that RSS number is sort of negatively impacting their unassigned fund balance, and that may be being held against them when it comes to some of these discussions we're having. So, if we find out any more fruitful information from some of those conversations we brought into, I'd be happy to share that with you all.
And regarding the slide as percentage of property tax between 63 and 66, how do we compare with other counties? Or, I mean, I understand the fact, but what does it mean? Are we in better shape? Are we in worse shape? Do we need to be looking at any other revenue sources?
So I think from an auditor's perspective, this is one of those where we sort of present this information. Sorry, to answer your first question, I think, yes, pretty comparable to other county governments that we work with across the state. And I think we show this to see, really what we're looking for is maybe a big spike one way or the other. I think if we were to see all of a sudden where, ad valorem tax revenue was trending downwards, then maybe we need to look at, are we in an okay position where that's fine? Or are we in a position where we need to consider what our tax rate is, versus, if they're going up significantly, then I think, that's one of those where do we need to look at, what is our overall tax burden for our county or for our municipality or what have you, and sort of make sure that we're not getting out of whack with rates given what assessed values are doing at the moment. So no real specific recommendations, I guess I would say, from this slide, but more just kind of a trend information to look at to make sure that it's sort of, pretty consistent over the last 5 years.
Thank you.
So these last couple of slides are really just informational, and I won't spend a ton of time about any of this, but new GASB pronouncements for next year, GASB 103, the financial reporting model improvements. This new standard from the GASB does not, no new financial statement elements. I'm sure Glenn and Mason will be happy that we don't have to, create new, new lease assets or subita liabilities or other things we got to worry about putting in the financial statements. So no new financial statement elements, and we're not measuring anything differently or in a new way. But 103 does change the presentation of a few things in the financial statements. The biggest change for Buncombe County and for all governments in North Carolina is that the state of North Carolina has always required the general fund budget to actual statement, has always required that to be a part of your basic financial statements. Governments right now have two options. You can present those as a part of your basic financial statements. So this is for your general fund and any of your major special revenue funds. You can present it as a part of your basic financial statements, or you can present it in the back in your required supplementary information, which is that section in the act for right after the footnotes. GASB 103 removed that option and basically says you have to put it in the back now in the RSI. So that'll probably be the biggest change, in that there's just a couple things like that that'll move in the financial statements. The county doesn't have significant business type activities or enterprise fund activities that have a lot of things that are going to qualify for reporting as a non-capital subsidy. That's another big change, but I don't expect that to have a huge impact on the county's proprietary funds. But certainly something that we'll work with Glenn and Mason and their teams to make sure that we get it captured correctly and reported correctly in next year's financial statement. So that's the biggest thing that's kind of coming right now. The GASB has a few other big projects going on, but none of those are related to new financial statement elements or big changes to our financial reporting. It's honestly, it's a lot of disclosure information is sort of kind of where we are and what the GASB is working on right now. And then the next two slides are just kind of more reminders about M&J and our governmental practice, specific about our governmental advisory offerings, and then our pre-quarterly continuing education, which we continue to do. So at that point, that kind of wraps up my presentation. That my last slide is just sort of a general, comments, questions, et cetera. And so with that, I'm happy to take any final questions from everybody.
Questions?
I have just a question on timing of this. So when is the final report going to be presented to the commission?
So as Tim stated, they are in final QC review this week. We expect to have everything complete and submitted to the state by the end of the month. And so we would target the first meeting in the new year for the board. So it'll be the first meeting in January or late.
And this committee is supposed to approve in some fashion.
Right. I'm going to ask for your acceptance and your recommendation for the board to accept based on what you've seen today.
As long as there's no substantial changes.
And then, as Tim said, if there is anything meaningful, then we would want to get back to you all, of course, to see if the board does.
Okay. That makes sense. Any other questions?
Thank you.
So I would like to, sorry.
I'll make a motion that we recommend approval of the audit to county commissioners.
Second.
Any discussion? All those in favor say aye.
Aye.
Any opposed? Good.
All right. Thank you, Tim.
Thanks, Tim.
Thank you.
Thanks, Tim.
Thanks, y'all. And like I said earlier, if there's anything else that y'all need from me, if I need to come back to the next meeting and go over things, whatever, just let me know, Mason. I'm happy to do that.
Okay. Certainly. Thanks, sir.
Yeah, thank you, Tim.
Thank you all.
Mm-hmm. And as he's leaving, Tim usually mentions that they have those free continuing education. I think several of you all have heard this and signed up. Well, please let me know. I can get you on the list. I'm on the list.
All right. Put into our agenda, so we don't have the contract amendment that we discussed. Administrative items, appointment of secretaries.
So we have several items. Bill, I know you're on a clock today, so I want to move quickly. The short version is currently Kelly is listed as the secretary for this board. We know that there are a lot of moving pieces. We want to make sure that support continues for you all while managing our capacity. And in this room, our request and recommendation is that you appoint me as secretary in addition to Kelly to make sure that at least one of us is around, and we'll kind of continue to play a team and supporting this group while we figure out the internal audit function and audit support.
Should we, look at these individually, or should we go through it, maybe vote on it as a group?
I think piece by piece, are you talking about all of the list of administrative items?
Yeah.
I think each of them is slightly different in kind of discussion, so.
So I make a motion that Kelly remain as the designated secretary and Mason be added as backup or support for that role.
Second. Further discussion? All those in favor say aye.
Aye.
Any opposed? Okay. Next item, committee membership. I haven't had a chance to talk to Al and y'all still working on thoughts about, we're gonna have at least one open on this committee. Need to be an elected officials to replace Patrick.
We'll get back with you.
Okay.
When the next meeting, but yeah,
All right.
we will discuss.
Okay, very good.
I want to mention if it's useful that a newly elected council member who happens to be ex-accountant, Jennifer Young.
What's his name?
Jennifer,
Oh, Jennifer.
yeah, Jennifer.
Appreciate that.
Yeah.
I haven't said anything to her yet. Don't tell her I said.
All right, so we'll discuss that at our next meeting. Next is the meeting calendar, and Mason has distributed that. And there's a big question about that. That kind of on our regular schedule that we've been on, so.
Yeah.
So the reason that we adopt the next year's calendar for regular meetings is so that we don't have to do the special meeting notice every time. So this is basically our designated, these are our meeting times. And if we need a meeting at a different time, then we would have to go through the special meeting, the special notice and all of that. But that is why we do this exercise every December, so that we don't have to advertise every single one as a special meeting. And this conference room has been put on hold for this time slot for these dates. And if you guys approve that, I'll remove the hold and make it official. But this does kind of follow the typical cadence of our meetings.
Okay.
I make a motion that the calendar be approved as presented.
Can I have one question?
Motion made, seconded. Any questions?
I had a question about the meeting next month. Was that the special meeting that you were referring to?
No, not necessarily. That'll be a separate discussion for interviews. So no, that's just a regular set of meetings for next year. And actions on that one, discussion items, I would expect close out of the fiscal 25 audit just to make sure we're all agreed and where it landed. We also are at the end of our initial 3-year term with Malden and so would like to discuss with you early if we would want to consider extending them to 2 years. But no, this is a regular meeting. The other conversation.
Thank you.
Any other questions? All those in favor say aye.
Aye.
Any opposed? Okay, calendar is adopted. Thank you. Audit charter amendment.
So I've distributed that with a single highlight. I think we have a broader discussion, but just wanted to focus on one item right now. But as we move towards sourcing our internal audit contract, audit charter currently references that we as a county have adopted a COSO internal control framework. I know the last few conversations we've had about the internal audit function, moving from COSO to Green Book. This committee is currently organized under board legislation for the adopted and ordinance that forms well that your membership as the control environment. And so we're moving to an outsourced contract. I think it's appropriate that we formally adopt Green Book in this room and with the board so that we're consistent in our conversation with the contractor. Separately, would like to hear from you all if there are any other changes to the charter that you would like to see. But today, asking for your consideration to adopt Green Book as the new internal control standard and recommend adoption.
That would be our recommendation forward for them to adopt it.
And then we will be taking that to the board. My understanding is that'll be something that legal and risk management will do.
Yeah, there's a provision under community responsibilities to communicate and interact with the internal audit director periodically.
Right.
Should that be changed to contractor or just we assume that it covers whether it's a contractor or in-house?
We can consider new language because I saw that note too. So
Yeah, and the one up, okay, yes. The second bullet two, committee is responsible for filling any vacancy in the internal audit director position.
That one you may want to consider allowing to remain in the event
Okay.
that in the future,
Right.
you have that latitude.
Or maybe should we have it an or thing, director or
Absolutely, we can do that.
contractor?
Yeah.
It's up to you.
Or where present.
I like the or, because that kind of
Or.
leaves it flexibility.
Yeah.
Yeah.
But either way, we will continue to make it clear you all have to present an internal.
Definitely.
There's other references to COSO.
Yep. So we will follow through those. I think that the COSO reference is the only one that was explicitly contained in the board's ordinance. So we'll follow up on this item. I think that's the main one for clarification.
So then we're anticipating that the contractor will then start the implementation of Green Book.
Auditors don't implement anything. The focus has always been, since I moved to risk, that it'll eventually be risk management
Okay.
that implements Green Book or COSO.
I just know we hadn't really implemented COSO.
And that's, and so the problem with that has always been the COSO knowledge has lived in internal audit, whether that was staff or if it's an external firm coming in, but auditors can't implement.
Right.
And I think that is one of the ideas as I moved to risk management that took me out of the internal audit world. And I'm now in a position where I can actually implement and do things instead of just audit things. And we have addressed capacity needs with my supervisor and those that flowing through the budget process, because right now our risk management division is right here. And we also handle workers' comp, vehicle claims, insurance, and many other things. So
I would imagine that this person could serve, not implementing, but as a close consultant to you that would give you the direct and advice to help you.
Yes. So that is the thing, and that's kind of like one of the discussions that I had with the prior two internal audit directors, well, prior three, if you count Matthew too, because they are intertwined. So you kind of have that 3 lines of defense model where your operations are your first line, risk and compliance is your second line, and internal audit is your third line. And you want to have all your frameworks in line, which will be the Green Book. And audit and risk and compliance frequently work together and leverage each other. An internal auditor, whether they're staff or an outsourced firm, will be able to leverage an internal control framework, Green Book work that we have in risk to do their work. So yes, it's very interconnected. They just can't implement. We can implement.
So they would just be doing the testing.
They would just be doing the testing.
And they'll be using that Green Book standard and framework that would align with what we're implementing. What we're counting. So,
Testing, and I would imagine that they would help document it. Their understanding
Mhm.
of.
Yeah, auditors.
Auditors.
same audit principles, just different standards.
Field help some,
Sir.
Mhm.
maybe that is.
Well, it's been such a long conversation, that I think from where I sit, it's important that Green Book be maybe implemented is not the right word, but instituted and implemented so that the framework exists. COSO, when it was adopted, would have been a great framework. It's not the standard now, but we never did anything with it. And so adopting things and putting them in paper and then never doing them is an exercise in futility. So I think the risk and protecting the county, it's critical. And that's the whole point of the three-legged stool. Is to protect the county, to make sure that all things are held to the same standard and that there's a process by which that's handled. And for as long as I've sat in this seat, we've talked about it, so I'm glad to see we're at that point where we can move forward, we can have the commissioners, public commissioners support and implement this in the correct way and not just talk about it, but actually do it and use it.
And we've studied COSO and the Green Book. I'm certified in COSO. And Candace is getting ready to be certified in COSO. Green Book is very, very similar to COSO. If you look at the two, they are very, very similar. The main differences is that COSO is designed for anybody. Walmart can use COSO.
Right.
Whereas the Green Book is very tailored. It's written by the federal government and it's tailored for government. So it's a little more applicable to our world than COSO is, where COSO is just kind of a little bit broad and there's some gray areas on how a government would implement and do these things. Whereas Green Book is like, bam, here it is. This is what you do. And their resources are free. You have to pay for everything you use, photocopy and everything with COSO resources. So there's that advantage as well.
So I make a motion that we amend the audit audit charter to recognize Green Book as our standard and remove any references to COSO. And that we also amend to include contractor, either internal audit director or contractor, wherever that's applicable in those bullets.
I second it.
Okay. Is it, just technically, is it an approval or a recommendation?
To do with the recommendations, a little bit of both. I think you all have more weight as a committee than a lot of other committees, so would like for you to adopt it as your standard and make the recommendation.
Very good. Any other questions? All those in favor say aye.
Aye.
Any opposed? Good. All right. Mason, interviews for internal audit.
Yeah, so there's a lot. I think we're at about 20 minutes for your availability, so I'll try to make the points but move quickly. We knew we needed to do this. We've moved on a very aggressive, but I think still successful timeline for this RFP. Done a lot of things, 4 to 5 weeks that we usually don't get done for a contract this big. The most recent item is actually several of us in this room, Melissa, Matt, myself, Kelly, sat in on the initial evaluation team for the 10 responses that we received from firms. We got a great response, which I think is good. We got great questions. We responded in 2 rounds. Our initial evaluation criteria, some of the obvious stuff, the qualifications, experience, understanding approach, reference cost, completeness as we experienced them in the responses. I think we got over 500 pages of response. I mean, a few of them very lengthy. So all together, there was good material for it to review. We initially talked about bringing 2 firms to you all, but 3 more so stood out in our minds. We just thought they deserved the complete conversation. So that stretched, I think, our scheduling capacity a little bit to be able to get the conversation done. So here are some points. Would like to schedule the interviews if we have time. Would like to hear from you all about the structure of the questions. But the goals are, can we get this done in the next 2 to 3 weeks? Considering we need a quorum of this group so that you all can again make a heavy recommendation to the board that this function. We are going through a bit of a special process. Generally, service contracts like this don't have to go to the board, but this one is important enough that I want to make sure that it carries all the way through. But you all, of course, your voices really matter in the election process. Can we do all of the interviews the same day, and then again allow space for to make the official final decision sometime in January, to give the space to contract negotiation. I do want to jump to this next set of bullets too, because it might determine kind of our scheduling conversation. I have been picturing 30 to 45 minutes a piece, maybe on the shorter end of that. Virtual versus in person. I want to hear if you all have any preferences. We really can do either from this space. Presentation, do you want to hear anything from them? You all haven't seen the proposal so far, but we will share those with you for the top 2 that are coming in advance. Do you want to hear any sort of introduction from them versus just a stock set of questions? And then we do think that we should have, the same set of 5 to 10 questions. 10 feels like too many, so like a 5 to 8. And then what's the best way for us as staff to support you in making a decision, scoring criteria, or do you just want kind of limited questions? And then we'll leave ourselves space for discussion for you all to make a recommendation at your comment.
Could we get a copy of your scoring matrix?
We can.
Sort of give us an idea, see if we jive or see if we see something.
Certainly, I can share that. And I have been intentionally holding these things. We have not communicated the revised plan to these firms yet, so I wanted to talk to you all before we started sharing any materials or any names.
I think having virtual is an option or a hybrid, just because it might be kind of hard. I'm assuming these firms are not all in the Asheville area.
Yes, right.
So then you got not only getting a quorum here, but then you got to get those folks there, and if they're accountants, they're busy in December.
Right.
So.
You know, we're interviewing with one of the partners of the firm, and somebody in the firm will be assigned, or are we speaking with the person that?
Yes, so
tentatively assigned?
the proposals did include the team that they expect to be assigned to our engagement, and we would expect those partners and even managers or directors, a significant portion of the team that we would be working with to be a part of.
Not the marketing guy.
Right.
It might be a group.
Right. And we would think 2 or 3, and we can request specific team members, we'll limit the number. They no more than 3, maybe the top.
And I'd like to see your scoring criteria as far as, are we talking 1 to 5, 5 to 10? Doesn't matter to me. And what criteria, I mean, obviously you want qualifications and things like that, but I'd be interested in not reinventing the wheel.
Right.
So this may be a very naive question, and it's so I apologize, but once we hire a contractor to do a particular function that's been in-house, who do they report to? How are they managed? Because internal audit is supposed to be separate, and doesn't actually, it's a function of the county, just like I can only reference this to my most recent Board of Elections. We are a function of the county, but we don't work for the county, and internal audit is the same. So how does a contractor work in that space?
I think that's a big conversation. I think you all started some of it when Avril made this recommendation at our last meeting. I'll skip ahead a little bit. We have started to draft kind of some questions based on your initial feedback, especially within the evaluation committee. But an initial question that has come up in this room and Martha sent through again is, what is a recommendation that I think of the firm that we select, what is their recommendation on the liaison and the business relationship and how they are managed? I think you all, again, have a loud voice in what you think the structure of the contract management for this will be. So I think that's to be determined, and we need to hear your thoughts on what you think the appropriate structure would be, but we can also hear from them as part of their process. Anybody else on the other staff?
I would just say if you're looking for a model of how this has been implemented locally in the city of Asheville, they do something similar with an internal auditor who comes in as an internal audit function. Also, city of Charlotte does the same thing.
We have seen, to that point, dedicated positions. I think the city of Asheville has a dedicated position within the finance department that is primarily the contract manager and liaison. Risk management is an option. I will mention our strategy and innovation department, but we have talked about that dotted line reporting where there is some direct access to the board commissioner.
Obviously, at that level of decision, but to me, it would appear that it would need to be a dotted line both to finance and risk, if that's the three-legged stool of how we protect the county. So what that looks like and how that structure is laid out. But I think it's critical that we maintain the separation. And I don't know that we've done a good job of that in the past. So obviously my concern is that we do that we provide the resources and the ability for them to do their job, but also that they are separate. Right. To the degree that it is required for that type of oversight.
And I know that the county manager wanted us to move quickly. That makes a lot of sense to me. I also need you all to feel the space and flexibility to do this at the level of detail and attention that you think. And so ideally, understanding that's still aggressive, can we get a selection and a recommendation this month? But then the contract negotiation happens on the other side of this. And so maybe the other side of this is a recommendation to the board to select a contractor and authorize county management to enter those negotiation decisions in partnership with Audit. I think a couple different ways, but.
So do you have a day that you're recommending for the interviews, or
I
that
mean,
you're
not
thinking?
necessarily. I kind of wanted to hear from you all. Do you have at the top of your list anything that is not available?
Can I ask another question, Mason? In addition to those questions, which look good, we also, my understanding is the long-term goal is over 3 years or so. We're hoping that they help us develop our own internal system so that we don't need them eventually. Correct.
That is correct. So does that sound like a conversation that needs to be introduced to them at the selection phase? What is kind of a longer term handoff plan look like for an internal?
I think we should at least tell them that that's what we're thinking eventually.
Well, maybe it becomes part of their plan and their process is to develop that, and maybe develop the staff or the employee that, you know, maybe that's part of their.
And we're looking for them to do it.
Yeah.
Right.
What did the RFP say? Because I don't, I'm just a bit concerned of saying, what I'm saying, doing a switcheroo. Unless we want to put that in a contract, you're gonna have a 3-year contract, and if we're not happy, whatever,
So the original RFP was for a 3-year contract.
3-year, okay,
Yeah, so this would not be changing this term.
okay, yeah, well, I mean, you see what I'm saying, you don't want to do a bait and switch type thing.
We may really like it.
Well, that's what I mean, we might like it, we may not, but I'm saying if I was gonna price out something, if I was gonna, negotiate a contract, I would be very different thinking I'm gonna work myself out of a job in 3 years versus if I do a good job, I can go on forever, because your upfront cost of training people is where the most expensive.
I had a question about the timing that bring this person on when it hasn't been implemented. How do they perform that internal audit of something that hasn't been implemented? And going back to that, that relationship that you're gonna have to form. Is this something that we want to gear up for and
We gotta see what Asheville and Charlotte did.
And
Well, sorry. take into consideration the 3 firms that we've selected. They have a wealth of experience and knowledge. So they're not bringing in new people to train to prepare for this. This is exactly what they are experts in. So this is what they do. They contract with entities, they go in and they do the audits, right? They go in, they make contacts with staff to connect to their systems, ask, introductions to the people that have the information that they need for whatever audit they're doing. This is what they do, right? So this isn't going to be a new concept. It's not the transition of coming in and getting acquainted. That's what they do for every client they send to.
They still have a get to know Montgomery
Yeah.
County.
Right, but that process is very well already established.
And Mike, I want to make sure I understand the question. Are you talking about us formally making the transition to Green Book in the next month or two and then saying, come in, I need you to audit us against Green Book, and we just adopted it? Is that a part of the question?
What about like that wouldn't be realistic, but the onboarding part of it, you're asking for an internal audit of something that you haven't implemented yet. So how do you kind of onboard this person and implement? And there might be a little bit more of an outline of how that.
I think
Most of these firms, I believe, have done this enough times, come in and help governments that they kind of already have that roadmap. And a lot of it will be just developing the relationships and knowing who to ask what, who are the main contacts in your departments, maybe spend a couple of days with them, go into the departments and introducing them to folks and kind of giving them the lay of the land. But I think as far as the actual internal audit process and setting up shop and performing the work, they've got the groundwork already established.
You had discussed having budget changes and staffing changes. And maybe we should coordinate with that so that, again, the availability for this to actually be implemented. So we're not faced with the same struggles that we should. Maybe looking at the calendar, can you tell me?
Just for clarity,
They cannot-
risk hasn't expanded or gotten those, but we've asked for more capacity.
And there are always the ability to add consulting hours on any of these contracts, but they themselves cannot.
Can you just tell me, when we look at that calendar year, is there one of those meetings that we put in a budget request?
That is typically, so the budgets kickoff things usually happen in September, and all the departments have to give their budget stuff, their budget requests in January. So typically, when I worked in internal audit, it was this meeting, the December meeting, that I would present my budget request to the audit committee and get your blessing on it before I passed it on to the budget folks.
so. We're well into that process for this year, but we have been in communication with the budget office and given them tentative contract only cost based on the proposal that we will be sharing with you all for the interview process. So they do have some numbers to work with already.
On the contract.
And honestly, we felt like some of the firms that impressed us the most had the most realistic cost, which are going to be some pretty significant numbers. And so I think we have some space to work with. I think we are communicating to budget right now the full space that we might need.
And I'm assuming that you've put in a request for like the liaison type person or additional risk people that could be designated in conjunction with the contract. Okay.
I've put in for another position request, so that'll give us capacity
Okay.
to not only do more getting Green Book up and going, but if it came down to this task, being the liaison between that, we would be able to do that as well. And we put in a request for the software component to do the Green Book implementation.
I think there was some discussion about the hotline as well, that's a component there.
So some of the proposals that we looked through, some of them have their own hotlines, which really is actually
Better.
It's advantageous.
Yeah.
I believe.
Yep.
So I don't know what that would do. I don't know what status we're in with our current contract, if we would have.
We've got like a 2-year window.
Okay. So But I think that's an advantage if they do have their own hotline that they
It's
run.
independent.
So I have a question, if, and I don't know that, but I'll start with a date.
Yeah.
December 15th is the commission meeting date, which tends to help the commissioners just be here.
I believe it's the 16th.
16th, am I looking at the wrong date? Oh, yeah, I can't see,
Close.
it's the 16th,
16, your bar.
but same week. But yeah, that would be my first thought, if we could do all three on that day.
16.
On the 16th, if that works. I'm just throwing something out to start the conversation.
This room is available as well.
And I, as a support player, this will prioritize whatever day that you want to pick, so that.
Does that work for finance as well? Is that,
Yeah, I mean, we already prepared to be.
Okay.
For the split meetings.
okay.
So
So,
I'm gonna put a hold on this.
all right, I make a motion, we meet on the 16th for 3 interviews.
Would it be in the morning or the afternoon? Because my husband has a medical.
What's What's best, is morning better or afternoon better? Morning?
Morning would be better.
Let's start at 9, like we normally do, and whatever allotment you think, Mason, as far as an hour for each, with 15 minutes in between, or 45 minutes with 15 minutes, or however,
3 hours.
3 hours, yeah.
It's good with everybody.
Yeah.
I just grabbed this room, so it's committed as well, and I'm available that day.
What is this, 310?
And I can send out a meeting invite if that's beneficial to you guys.
So we will,
Apologize. I think hopefully you'll send materials that maybe, suggested questions, we could react to it.
I think that's a good point. So we will communicate to the 3 firms this week, we'll get a calendar this week. Start to say. We have a fight here. I think we have some. Okay, so I think we have clarified all the necessary actions for today on that point. We'll move forward and be in touch with you on that. A couple weeks out, we will have those interviews. Next on our agenda is public
Public
comment.
comment.
Nobody in the room and nobody online, so.
Okay.
Generally like a placeholder for open discussion items, nothing in mind today. You all had asked some follow-up questions in the last meeting, hotline, how will it be handled, categories. We are still in a space where there are many hands kind of picking up that we're closed right now, so yeah.
I do know that, the county attorney, Kurt Eelder, is the one that's getting hotline complaints that are not related to human resources functions. He did verify that, so, and he has the direct line of reporting to the Board of Commissioners, so.
And to, just add a clarification point earlier, we were talking about NAVIX, which is our hotline solution, and whether or not there is a solution that contractor has that maybe we want to take advantage of. That would not be, us having that is not an impediment to taking advantage of that, simply because we use NAVIX for other things too. That would just be a modification.
Okay.
And it would not be, it's not a consideration you need to take into account when thinking through whether or not you want that to be internal or.
Just say thank you for all your hard work with the audit.
Thank you all for
Thank you, Glenn.
the thoughtful questions.
So I make a motion that this meeting be adjourned.
Second.
I don't think you'll get any rebuttal on what they spelled.
It's always easy when.
Thanks, guys. Thank you all very much.
Materials to come. I'll try to get them out to you quickly today because this week.
There.
Right.
Such a bit of training, it's amazing if you say something.